Hello and welcome. Today, we're going to pull back the curtain on a part of the financial world you deal with all the time, but maybe don't think about nearly enough: distribution. This is the engine room, right? It's what connects you to every single mutual fund, every insurance policy. It's really the business of selling belief. And you know what? It's going through an absolute revolution. So let me ask you this. Ever really stop to wonder who gets a cut when you buy that insurance policy or invest in a mutual fund? It seems like a simple question, but the answer? Oh, it's fascinating. When you put your hard-earned money to work, this whole hidden ecosystem springs to life, and their world, how they work, how they make money, is being totally turned on its head. Okay, let's dive right in. For decades, you could think of financial distribution in India as this giant, well-oiled superhighway. You had the product makers, the insurance companies, the fund houses on one end, and you, the customer, on the other. And this highway, it was built and controlled by a very specific set of middlemen. To get a sense of just how powerful this old model was, all you have to do is look at insurance. I mean, check this out. A staggering 55% of the market was controlled by individual agents. That's your friendly neighborhood advisor, the person who comes to your home. And when you add in bank assurance, that's just your bank selling you policies, you quickly see that almost the entire business ran through these old-school, relationship-driven channels. So this highway had its key players, right? You had the big banks using their trusted brand and their branch networks for bank assurance. Then you had this massive army of individual agents building their business on personal connections. And yeah, you had corporate agents and brokers in the mix too, all fighting for a piece of the action. The methods were different, but the goal was exactly the same: connect products to people. But then, two massive forces hit this superhighway like earthquakes, and they fundamentally changed all the rules of the game. First up, regulation. And it wasn't just one big bang. It was this steady drumbeat of change year after year. It really started getting serious around 2013, when direct plans let investors just bypass the middleman completely for mutual funds. Then in 2018, bam, commission disclosures became mandatory so you could finally see the hidden costs. By 2020, regulators were putting hard caps on insurance commissions, hitting those traditional profits directly. Every single step was designed to give more power and more transparency back to you, the investor. Now, the second earthquake was technology, and its impact was, well, just as huge. All of a sudden, new companies could bring in customers for 50, 60, even 70% cheaper than the old guard. Onboarding a new customer, which used to be this whole thing with days of paperwork, could now be done in minutes, right on your phone. And this tech-first approach, it let these new players reach deep into smaller towns and cities, places where the old guys always struggled to expand. So what do you think happens when you combine more regulatory transparency with this hyper-efficient technology? Well, you get what we're calling the Great Commission squeeze. It put immense pressure on the very lifeblood of the old system, those fat commissions. Let's follow the money trail and see just how dramatic this shift has been. Okay, take a really popular product like a ULIP. In the old days, an agent could pocket an upfront commission of up to 35% on your first year's premium. Think about that. That's a massive incentive to sell, sell, sell. Today, not a chance. Those same commissions are now under strict caps from the regulator. The entire profit model for selling these things has been completely turned upside down. And look, this commission squeeze wasn't just for ULIPs. It was happening pretty much everywhere. You can see here, commissions for hot items like equity mutual funds and, of course, ULIPs were falling thanks to all that regulatory heat. But it's interesting, right? Some areas, like simple term insurance, stayed pretty stable. And then you have these niche, high-ticket products like PMS and AIFs, where commissions are actually growing because they cater to a totally different kind of client. So the old world of high, often hidden commissions is fading away fast. A brand new battlefield has emerged, and it's defined by things like technology, scale, and transparency. So the million-dollar question for anyone watching this space is, who is actually winning in this new environment? The growth numbers, they pretty much tell the whole story. You can see the market share of individual agents. The backbone of that old system is clearly shrinking.
Now, corporate agents are still growing, that's true. But the real explosion, it's the digital platforms. They're growing at a blistering pace. All the momentum has shifted.
And this has created a whole new cast of market leaders. The big bangs, they're leveraging their huge customer bases and that built-in trust. You've got the tech-focused, pure-play companies like AP FinTech winning through specialization. Then the digital-first platforms like Grow are just dominating on user experience and low cost. And hey, let's not forget the traditional agents, like from LIC. They still hold a lot of power through those deep-rooted local relationships, even if their overall slice of the pie is getting smaller.
Okay, so we've seen the disruption, we've seen the new winners emerge, but how can you actually use this knowledge? How do you make sense of it all? Let's try to distill this down into a kind of investor's playbook, a way to analyze the companies that are fighting it out in this new world.
So, what does it actually take to win now? This scorecard kind of reveals the new rules of the game. First, you have to be a top 3 player in your main business. Second, your technology can't just be good, it has to be industry leading. Third, you need high quality revenue. That means over 60% of it should be recurring, not just from one-time sales. And finally, you have to be efficient, with operating margins north of 15%. This is what separates the real long-term winners from the companies that are just riding a temporary wave.
All right, let's boil it all down. What are the key takeaways here? First, the whole game is shifting from relationships and commissions to technology and scale. That's the big one. Second, all this regulation is actually a huge tailwind for you, the investor, because it's forcing more transparency and lower costs. Third, digital platforms are the clear winners right now, gaining market share like crazy. And finally, going forward, scale and tech are the new keys to the kingdom. That's what will define the leaders.
And that leaves us with one final and, I think, really crucial question to chew on. This new era, it's definitely better for the investor in so many ways. But as the old middlemen fade away and these powerful new digital platforms take their place, who really owns the customer relationship now? Is the ultimate winner the investor who gets a slightly better deal? Or is it the platform that now stands as the powerful new gatekeeper? That's something to think about. Thanks for tuning in.